Hey everybody, it's Jermaine and welcome to the podcast. So guys, today I just want to think about where we are in the economy right now and how it's kind of stacking up against the economy that we saw in COVID. You know, one of the things that we were really clear about on the pod was just how much financial downturn we as normal people were all experiencing and just how dire the future outlook was during COVID times. Now, one of the great things is there were opportunities, and if you really went after it, COVID probably gave people a lot of upside. They had a lot of opportunities that they could capitalize on because a COVID economy meant that things were a little bit cheaper. It meant that there were chances to save a little bit more money, which you could then invest elsewhere. It meant that there were other opportunities that came up. What we're seeing now, though, when we think about the economy, I think we're seeing a lot of warning signals that show us we are moving towards an economy that could very easily be tougher than the economy we faced in COVID. And let's just very quickly think about some reasons why that may be. Well, if you look at real household incomes, for most households, income has not in any way, shape or form been increasing. It's been broadly flat. It's pretty much why you're seeing a lot of strike action across different industries at the moment, because people's wages aren't going up. Now, when we look at the period of time pre-COVID, we had a similar situation where real wages had not been increasing as quickly. But what we really saw, which was helping, was that inflation was slightly more in check. So while we didn't have wage growth, prices in the economy were generally more stable. What we're seeing now is that we're seeing that we still do not have wage growth. That's point one. But point two is where have prices gone? Well, right now in the UK and in America, we're talking about 10% inflation. Now, on the pod, we've been talking about 10% a while ago, which means that the real level may well be more like 15 depending on where you live. What that means is that that's how much prices have gone up. Now, if prices have gone up by, say, 10 to 15%, but real wages have maybe only been increasing by maybe 1% or 2%, it leaves a massive gap for all of us because essentially everything we do becomes more expensive. We're seeing that in travel, we're seeing it in food, we're seeing it in the price of energy, unbelievable. So we're talking about the core things that we need. You know, it's not like we're just complaining about prices going up on holidays. We're seeing it in all aspects of our core consumables. Prices are increasing and we're not having the wage growth to support it in the slightest. Now, that is something that we were on the brink of pre-COVID because we didn't have the wage growth, but inflation was more in check, and so we had a greater feeling of being comfortable. But now real inflation is starting to creep in, or it's more than starting to creep in, has really set in. The harsh realities are becoming a lot clearer. Pre-COVID, we'd also just seen the earlier days of things like Brexit decisions. And there were still question marks as to whether Brexit would be good for the UK economy. Well, look, where are we now? I mean, if we're going to draw a conclusion, it's almost certainly that what we were hoping for with Brexit did not transpire. That's almost certainly the conclusion that we have to draw. And the UK economy is finding itself arguably more isolated than it ever has been before. And it's more isolated at a time where we've also got more political uncertainty because we haven't even got a stable government right now. Now, interestingly, you might argue that you're seeing similar things happen in the US. US foreign policy has been a funny place for a while. Now, the extent to which the US might ever be considered isolated, you can debate. But one thing is looking pretty sure is that there are some question marks about the situation of the government. Now, it's not something that I personally want to go into too much on and share too many opinions on, but it is to say that when you've got economies where real wages aren't rising, you've got very high levels of inflation, you've got instability politically instability economically, and then in many societies, we're talking about instability socially. These are often soft markers of downturn, of economic downturn. And that's before we look at the way in which the stock markets have been underperforming. We've seen massive value get wiped off cryptocurrency, huge losses across the cryptocurrency industry. I think, what did I read? $2 trillion maybe worth of value that's been wiped out. We're seeing the capitulation of Bitcoin, which is kind of like the benchmark cryptocurrency, and all other altcoins around it have really tanked a lot. We're seeing listed company share prices massively get hit. All of this is pointing towards a next few months that are going to be really difficult, because you've got instability at home, right? Because you've got your wages staying flat, and you've got all the prices of everything that you consume increasing. You've got potential instability abroad, although many of us don't necessarily look and say, what is our position in the world? We've still got the very uncertain global macro context. You know, it's not just war with Russia and Ukraine. We're also thinking about the assassination of the Japanese PM and a whole host of other macroeconomic factors that give us instability abroad. We've then got our relied upon financial mechanisms that aren't really functioning properly. So when you've got cash, for example, a high inflation environment where prices are going up makes cash worth less. Where you've got savings, we're looking at all-time lows in terms of saving rates. Now, some rates of interest that are being paid on savings have been increasing. But one interesting measure you've got to look at is, what is a standard variable rate of interest charged on a mortgage, and what is the rate of interest offered on an easy access savings account? The gap between those rates is at the highest it's been in years, and it's really reflective of an overall poor environment for savers overall, as well as a more taxing environment for those people who are consuming, those people who've got mortgages and who are spending. When you whack all this stuff together, we've got to be smart, really smart, because it's very unlikely that we're going to be comfortably spending money day to day, and it's also very unlikely we're going to be comfortably making returns on our savings or having confidence about them. This is exactly the kind of warning signal, guys, that I'm very adamant we should all be sharing as clearly as we can. It's not to kind of get people overly concerned, but what it is to say is just make sure we are awake and seeing what is right in front of us. It is really difficult to miss and ignore all of these different signals that say your money's not going up, what you need to spend is increasing, the amount you're saving is decreasing in real terms, and overall life looks a lot less certain politically, economically, and socially. You put that together, it usually is a big alarm bell. So I'm raising the bell now. Let's get in tune with this risk early. What's going to happen is, if we're wrong, you know what, we've maybe made some sensible moves to try to bank a little bit more money, to make ourselves a little bit more financially resilient, to get a little bit more good quality help and support where we can. And you know what? There's nothing wrong with that. Nothing bad at all. It will absolutely help us. If we're right, we're going to have made the survival steps early. And a lot of this is about survival and longevity in what you're doing. A lot of this is about making sure you are able to play the game, as many games as possible, for as long as possible. And one of the key things about that right now is avoid going broke. Keep yourself in that more solid financial mindset and position, and prepare for the uncertain future ahead. Okay, guys, hope you took value from this pod. This for me is going to be a massive focus, particularly for the next 6 months. Really strong planning. It really feels like that COVID mindset that we had early on, getting everything lined up. One thing that we all need to be mindful of is that we are out of a lot of the COVID life, which means that we're no longer locked down with kind of these huge restrictions placed on us. We're more open now, and that openness sometimes clouds our judgment a bit. For me, I'm going back into that COVID mindset, tightening things up again, closing things down again, and just trying to get things lined up for the future. Because I think the warning signs are there that the economy could be hit. The warning signs are there that we could face some really tough, uncertain times ahead. And so we've got to start preparing, and that's what we're going to be doing. Share with us your ideas, guys. I hope you took massive, massive, massive value from this podcast, looking at the potential future we've got ahead. And I hope you share with your friends who you think can get value as well. I look forward to speaking to you soon. All right, take care, guys. Bye-bye.